Hello everyone, welcome back. Let's look at the index and check out how they performed, also the outlook for next week. Now, it has been a volatile week for the US market again as FOMC announcement failed to calm the market. Instead, the market continues to sell off while Powell was giving his speech. Despite already pricing the hawkish announcement, the market seems like it is still very surprising when Powell announced upcoming rate hike and stopping the QE program in March. While swings during the intradays, and let's take a look at what do the swing tells us. Now, let's take a look at the Dow. Now, last week, I mentioned that the selling may not be over until FOMC for the Dow. Well, we have witnessed selling on stocks most of the time last week, and we do see that the support range for the Dow that I have plotted over here, 2573 to 2720, held firmly. So we have some consolation as the Dow managed to close positively at the end of the week. So on Friday, we have some relief as the Dow recovered some loose ground. However, this is not the end, but just the beginning, as it is too soon to confirm that the Dow is on its path up. The Dow needs to break up from this level, 34809, and close above the level to put itself in a better positions to continue to move higher. So we would want it to at least hit 35487. That will meet halfway to the downside. As such, it can help to generate some positive sign. So to give you case in point is here. See, Dow was on the correction mode here. It rebounded, and then it went to somewhere halfway where it came down from. And then it managed to continue higher to hit the high. Now, as in many cases as well, here as it rebound, it hit halfway, then before it consolidate, then continue to move higher. So there are many cases as such. So we need the Dow to recover somewhere around here to tell us that the path of upward movement is likely to be there. Now, let's move on to S&P 500. Now, S&P 500, as I mentioned last week, the selling isn't over, similar to Dow. And the S&P 500 is likely to retest the 43202 support level as it did. So it's not surprising, as I have already plotted the 10.7% correction is within the range. And since it had peaked from the 4th of January trading. So fortunately, this support managed to hold, and S&P has managed to close positively last week, giving us a glimmer of hope. And similar to the Dow, it needs to break certain level in order to give us signals or sign that is on the path up. So we have to see the S&P 500 hitting 4,493 above this level, and then move up to 4,600 at least at that point next week, in order to be able to continue to move higher back to the high where it went to as high as 4820. Now, let's move to NASDAQ. So NASDAQ is the most hit counter, as it was down 17%. So Dow was down 7%, around 7 point, or rather close to 8%. S&P 500 10.4%, 10.7%, or slightly more than that. And then S&P NASDAQ was down around 17.3% before it started to recover. The potential movement is where we see S&P start to move up, Dow start to move up, and NASDAQ has to clear 14,192. Then this is where we can see more potential upward movement, and we need NASDAQ to go back to at least 14,870 to move higher, so somewhere around this range, in order to set itself back to upward movement. A lot of big mega tech counters have been selling off, right? If I use the word vigorously, but we see some encouraging sign as Apple sees some improvement in supply chain. So I would think that a lot of tech counters will follow suit, and Tesla, despite announcing fantastic results, because of the supply chain issue similar to Apple, it provided some bleak outlook. But I think they should be able to overcome them, because the market, or rather we human, is always ever improving. And then although we have a problem now, it doesn't mean that you will be a problem forever. Case in point is when we see when COVID first outbreak, we see the shortage of masks, and the market was shortage of gloves as well. So this is where we can see that, you know, all the gloves companies has been shooting up. Medical healthcare companies are shooting up, because they are going to have more profit margins due to higher selling price. But very soon supply follow up, and then demand starts to come down. So therefore we see that now the medical companies are not really in play right now. So this will be the same as well. The cycle will repeat itself. So supply chain issue will be resolved soon, I believe. And let's take a look back to the S&P performance chart, because this is the end of the month already. As I mentioned in the beginning of the month, where if we see a negative January, we have seen it, we may see some recovery in February. Okay, so as I mentioned earlier, if we see some positive January, we may see a down February before we recover in March. So February is generally a down month, but if January we are down very badly like this, minus 20%, you can see that it recovered in February and went all the way up till March. But we are down somewhere around here at the midpoint. We are 10% down. So here we still have a chance. Looking at the blue part, you see February it rebounded and then continue to move higher in March. Let's hope that this will continue. Okay, and we are looking at the market continually focusing on the rate hike. Okay, because although we don't have FOMC in February, the market will still continue to use this as an excuse to move the market. Inflation numbers, job data, and corporate results are some of the key informations that the market will be focusing on in February. So do keep a lookout. So if the S&P 500 do recover in February and much higher in March, then this is where you can really follow the market movement, as we have a very clear picture where it can move off. And this is usually what we call the market cycle. Now let's move on to Asia. Let's start with STI. Okay, STI, the index fails to continue its trend, but rather break down to retest its support level over here at 3247. Now, the index actually shows us a very bearish sign, although the support at 3247 holds very well, but we see a lower high over here. Now, if we are looking at the breakdown below 3234 over here, then it may be a sign of a downward movement like this over here, like this part of the chart where STI breaks down and continue lower. We may see this if this level breaks. Okay, so just be careful. Next week we are having a short week due to Chinese New Year. So happy Chinese New Year in advance to everyone. And we really need to see where the index can close in order to tell us what could be the next potential movement. So for the time being, I see 3234 level very critical, but I don't know how it's going to test it. It could be whipping up and down here before it breaks down. History can repeat itself before it breaks down. February, what to note is that we have a budget coming, and the market may react negatively to the GST hike and whatever hike the government is going to do. Okay, especially maybe the petrol, they're going to increase again. So maybe you're going to pump, $5 a liter. Okay, just joking. But anyway, continue move on. We are looking at Hang Seng. Hang Seng, as I expected, a pullback, but the pullback is more than what I anticipated. So the huge pullback has actually negated the uptrend, and it is very disappointing. Why? Because the uptrend is in fact a short-term one, and we are looking at Hang Seng back below this support level at 23627. So overall, the whole chart looks like it's going back into a downtrend, especially if Hang Seng cannot go back up above this 24461 and cannot touch 25,000 resistance. It will be a challenging road ahead for Hang Seng again, as if the market still sees negative policy from the government, we may have a challenging year for the China market yet again. So it's not conclusive. So we'll continue to watch where Hang Seng is going to develop, get more clue which it can move off, or rather, I shall put it this way, is more clue of the next slightly movement. So overall, it hasn't been a good week for both US and Asian market, and more challenges ahead, especially when both US and Asian market doesn't move in tandem, unlike the past. Thus, we have to play by ear and watch at the daily movement to get more clues of the next potential movement, which I mentioned earlier. Okay, so thank you for viewing this video. I will see you again. Goodbye.